What if we told you that one of the most influential and successful investors in the world has a bold and optimistic vision for the future of Bitcoin, Tesla, and artificial intelligence? Would you be interested to hear what she has to say? Then let's discuss everything about Cathie Wood's outlook on Bitcoin, Tesla, and artificial intelligence for 2024. Stay tuned. ARK Investment Management, a leading provider of thematic exchange-traded funds, recently made headlines when it sold its entire stake in the Grayscale Bitcoin Trust, a popular product that tracks the price of Bitcoin. The sale occurred on January 5, 2024, and amounted to about 8.5 million shares, worth around $344 million at the time. The move surprised many investors and analysts, as ARK has been one of the most vocal and bullish supporters of Bitcoin and the broader cryptocurrency space. ARK's founder and CEO, Cathie Wood, has repeatedly expressed her optimism about the future of Bitcoin and has predicted that it could reach $500,000 in the next 5 years. ARK's flagship fund, the ARK Innovation ETF, has also invested heavily in companies that are involved in or benefit from the crypto ecosystem, such as Coinbase, Square, and Tesla. So, why did ARK decide to sell its GBTC shares? And what does it mean for its crypto strategy? Regulatory and tax uncertainties. One of the main reasons that ARK cited for selling its GBTC shares was the regulatory and tax uncertainties surrounding the crypto space. In a recent interview, Wood said that ARK was as optimistic about Bitcoin as we ever have been, but that there were a few regulatory and tax uncertainties that made them cautious. Wood did not specify what those uncertainties were, but they could be related to the ongoing efforts by the U.S. Securities and Exchange Commission, SEC, to regulate the crypto industry, especially the approval of Bitcoin ETFs. The SEC has been reviewing several applications for Bitcoin ETFs, which would allow investors to buy and sell Bitcoin through a regulated and transparent vehicle, similar to other ETFs. However, the SEC has not yet approved any of them, and has repeatedly raised concerns about the potential for fraud, manipulation, and lack of investor protection in the crypto market. If the SEC approves a Bitcoin ETF, it could have a significant impact on the demand and price of GBTC, which is currently the only way for U.S. investors to gain exposure to Bitcoin through the stock market. GBTC is not an ETF but a trust that holds Bitcoin on behalf of its shareholders and charges a 2% annual fee for its services. GBTC shares trade on the over-the-counter market and are not subject to the same regulatory and disclosure standards as ETFs. GBTC shares also do not reflect the exact value of the Bitcoin held by the trust, but rather trade at a premium or discount to the net asset value, NAV, of the trust, depending on the supply and demand of the shares. A Bitcoin ETF could offer several advantages over GBTC, such as lower fees, higher liquidity, better transparency, and more accurate price tracking. Therefore, if a Bitcoin ETF becomes available, many investors could switch from GBTC to the ETF, reducing the demand and price of GBTC shares. This could also result in a tax liability for GBTC shareholders, as they would have to sell their shares at a capital gain or loss, depending on their cost basis. Wood said that ARK had been waiting for the discount between BTC and NAV to narrow, as it was as high as 50% at one point last year when there was great uncertainty around the crypto market. However, the discount has not narrowed significantly and was still around 15% as of January 5, 2024. Wood said that there were no other products that ARK could use to gain exposure to Bitcoin at the moment, and that it was just a moment of uncertainty between now and January 8th to 10th, somewhere in that range, when the SEC could announce its decision on the Bitcoin ETF applications. Wood said that ARK did not want to take any risk and decided to sell its GBTC shares out of an abundance of caution. ARK Next Generation Internet ETF. Another reason that ARK sold its GBTC shares was that it wanted to focus on its product, the ARK Next Generation Internet ETF, ARKW, which also invests in the crypto space. ARKW is an actively managed ETF that seeks long-term growth of capital by investing in domestic and foreign equity securities of companies that are relevant to the theme of next-generation internet. Wood said that ARK wanted to get a little bit specific with its crypto exposure, and that it was talking about the ARK Next Generation Internet ETF, which had a 10% allocation to crypto assets as of December 31, 2023. Wood said that ARK had been investing in companies that were enabling the crypto ecosystem. Wood said that ARK believed that these companies were more aligned with its vision of the future of the internet and that they offered more growth potential and diversification benefits than GBTC. Wood also said that ARK was looking forward to the launch of a new product, the ARK Crypto ETF, ARKC, which would be a passive ETF that would track the performance of a thematic index of companies that are leaders in the crypto economy. The index would include companies that are creating, facilitating, or utilizing crypto assets, such as miners, exchanges, custodians, wallets, payment providers, infrastructure providers, and blockchain innovators. Wood said that ARKC would be a more comprehensive and efficient way to access the crypto space, and that it would complement ARKW's active strategy. Implications for investors. ARK's sale of its GBTC shares could have several implications for investors who are interested in the crypto space. First, it could signal that ARK is losing confidence in GBTC as a viable product and that it expects the SEC to approve a Bitcoin ETF soon. This could put more pressure on GBTC's price and discount, and could also trigger more selling by other institutional investors who hold GBTC shares. Second, it could indicate that ARK is shifting its focus from Bitcoin to the broader crypto ecosystem and that it sees more value and opportunity in the companies that are enabling and adopting crypto innovation. This could boost the demand and price of ARK's funds, especially ARKW and ARKC, and could also benefit the underlying stocks that ARK invests in. Third, it could reflect ARK's conviction and vision of the future of the internet, and that it believes that crypto is an integral part of the next generation of technology. This could inspire more investors to follow ARK's lead and explore and embrace the crypto space as a long-term investment theme. Wood is one of the biggest boosters of Tesla and Elon Musk and has predicted that Tesla will reach a market value of $3 trillion by 2025. Wood's flagship fund, the ARK Innovation ETF, RKK, has invested heavily in Tesla, making it the largest holding in the fund with a weight of over 10%. Wood has a long-term and optimistic view of Tesla and Elon Musk and believes that they are leading the EV revolution and creating value for society. Wood has identified several key factors that differentiate Tesla from its competitors and drive its growth potential. Tesla's vertical integration. Tesla controls its entire value chain, from design and engineering to manufacturing and distribution to software and services. This gives Tesla a competitive advantage in terms of cost, quality, speed, and innovation. Tesla also leverages its data and artificial intelligence capabilities to improve its products and services and create new revenue streams such as autonomous driving and battery storage. Tesla's technology leadership. Tesla has a technology leadership in EVs, especially in battery technology, which is the key component of EVs. Tesla has developed its own battery cells, modules, and packs, and has achieved the lowest battery cost and the highest energy density in the industry. Tesla's brand loyalty. Tesla has a loyal and passionate customer base, which is attracted by Tesla's mission, vision, and values, as well as by its products and services. Tesla has a high customer satisfaction and retention rate and benefits from word of mouth and referrals. Tesla's innovation culture. Wood also acknowledges Elon Musk's brilliance and innovation but emphasizes the importance of analyzing both Elon Musk as an individual and the companies he creates. Wood also recognizes that Tesla is not the only company that Elon Musk is involved in, and that his other ventures such as SpaceX, Neuralink, and The Boring Company have implications for Tesla and the EV market. One of the companies that Wood has highlighted as a top AI player is Meta Platforms Incorporated. Wood believes that Meta's open-source AI approach will give it an edge over its rivals, such as Microsoft, Apple, and Google, who are also pursuing their own metaverse ambitions. Wood thinks that Meta's open-source AI strategy will enable it to attract and retain more talent, partners, and users, and to foster more innovation and collaboration in the metaverse space. Wood also thinks that Meta's open-source AI strategy will help it address some of the ethical and social issues that the metaverse may pose, such as privacy, security, and inclusion. So, what do you think of Cathie Wood's outlook on Bitcoin, Tesla, and artificial intelligence for 2024? Do you agree or disagree with her predictions and opinions? Do you have any questions or comments about her vision and strategy? Let us know in the comment section below. Please give it a thumbs up Share it with your friends and subscribe to our channel for more.